Hey there everyone, hope you guys are doing well. It is Monday, October the 12th, 2009. Happy Thanksgiving to our neighbors to the north there in Canada. Hope you guys are doing well too. I wanted to talk about the recent article that came out. It's kind of a blockbuster, if you will, out of Bloomberg in regards to the dollar. I'll go ahead, I'll post this in the sidebar too, this Bloomberg article. Basically it's entitled, "The Dollar Reaches Breaking Point as Banks Shift Reserves." Okay. I'll just go ahead and read this. I'm going to read the first few sentences here. I'll definitely insert my comments, so I'm not trying to bore you guys to death by reading to you, but I think there's some interesting language in here. Central banks flush with record reserves are increasingly snubbing dollars in favor of euros and yen, further pressuring the greenback after its biggest two-quarter rout in almost 2 decades. Policymakers, not U.S., but world policymakers, boosted foreign currency holdings by $413 billion last quarter. That's just in a quarter, ladies and gentlemen. 1 quarter they boosted it by $413 billion. That's the most since at least 2003. And remember what was happening in 2003? We had the Iraq thing going on too, just starting up. So maybe there's a correlation here, maybe not. Anyway, the total now is $7.3 trillion, according to the latest data compiled by Bloomberg. Nations reporting currency breakdowns put 63% of the new cash into euros, yen in April, May, and June. The latest Barclays capital data show. Of course, that's the highest percentage in any quarter, with more than an $80 billion increase. Now, here's the next paragraph, if you will. That's, I think, quite interesting. World leaders are acting on threats to dump the dollar. World leaders, guys, not the U.S. The world leaders are acting on threats to dump the dollar, while the Obama administration shows a willingness to tolerate a weaker currency in an effort to boost exports and the economy, as long as it doesn't drive away the nation's creditors. Well, I mean, that's almost funny, isn't it? All right, so basically they're saying here that the world, the entire world, is trying to, what it seems like to me is they're trying to do everything they can to prop up the dollar, have a slow decline. Everybody kind of slowly exit the doors. We've all had this meeting, guys. We all have an agreement, right? But the Obama administration is basically saying, well, we want a weaker dollar because we want our exports to be more affordable to the rest of the world. Well, the only thing we export, guys, is agricultural products, right? I mean, we still export quite a bit of that. I'd say we're still the world's, breadbasket, if you will. But I mean, we don't make anything else. I mean, I can't think of anything else that would, spur economic activity because we're making something and the world is buying a lot of something that we make. Anyway, I think it's just silly. Anyway, the diversification signals that this currency won't rebound anytime soon after losing 10.3% on a trade-weighted basis just the past 6 months, which is the biggest drop since 1991. Next paragraph is very interesting too. This is a quote from Stephen Englander. He happens to be a former Federal Reserve researcher who's now the chief U.S. currency strategist at Barclays Bank in New York. He basically said, global central banks are getting more serious about diversification, whereas in the past they used to talk about it only. It looks like they really are backing away from the dollar. So you've got a former Federal Reserve researcher, right, who's basically come out and saying, of course I realize he works for Barclays now, but he's basically saying, hey man, from what I can tell, everybody's serious about getting away from the dollar now. Next paragraph is entitled Sliding Share. The dollar's 37% share of new reserves fell from about a 63% average since 1999. So the past 10 years, we have gone from the world would hold the dollar in reserve at 63% in 1999. And today, now it's at 37%, which is quite a bit of a drop. And this has been going on for the past 10 years. That's really interesting too, if you think about it. Englander concluded in a report that the trend accelerated in the third quarter. Yeah, that's for darn sure, isn't it? He said in an interview that for the past couple of months, the forces are still in place for continued diversification. Yeah, that's true. I definitely agree with that. Flush with dollars is the next paragraph. The world is currently flush with the U.S. dollar, which is available at no cost. So this is going back to the dollar carry idea, right? So now they basically told us, okay, dollar carry is definitely coming in full force and effect. So now investors can take cheap dollars, at 0.5% interest, go to places, say, let's say Australia, because they just raised their interest rates. Buy some bonds there or whatever with U.S. dollars that they really don't have to. It's a form of arbitrage, and the difference that they get between the interest rate they earn in Australia versus the interest rate they have to pay here in the U.S. is their profit. I mean, it's free money. So here's another thing. It's, again, I always, whenever I talk about the media and stuff like that, I always say in these articles that somewhere in the body of the article is going to be true intent, and there's going to be the real news stories somewhere embedded. So this is important. If there's a turnaround in U.S. monetary policy, there will be a change of perception about the dollar as a reserve currency. So basically, this sentence says that right now the dollar is not looked at. Their perception is that the dollar is not the world reserve currency. The diversification has more to do with reduction of concentration risks rather than a dim view of the U.S. or its currency. Well, we have to, continue being politically correct there. And here's another thing that this other paragraph too kind of is interesting, and it's entitled "Follow the Money." Englander's conclusions are based on IMF data from central banks that report their currency allocations, which account for 63% of total global reserves. Barclays adjust the IMF data for exchange and currency rates, blah, blah. Just backed out the differences and turned it into real numbers, essentially. What I think is interesting here is Englander's conclusions are based on IMF data from central banks. Now, for you conspiracy theorists out there and all that, and I think there is something to this. When you are an owner of a company or a manager of a company or whatever, and you've got direct reports, they report to you, right? They report information to you. Well, the IMF is acting like this manager. They're getting information from the central banks from around the world, and they're reporting this, right? So this information is filtered through IMF, because he even said that's where he had to go. Englander had to go to the IMF to get this information. So I think there really is a move to make the IMF kind of the Supra World Federal Reserve, if you will. I think it's pretty clear. The SDRs have been in place for a few decades now, but they're really starting to come into play, and it's fiat currency too, of course. So anyway, I just think this is interesting, and I thought I'd hold off on the reporting on this article for a little bit because I wanted to see what the dollar would do today. I really figured today it would bounce off 76. I said, I bet you even in light of this, I know it dropped from almost 77 down to 76. I bet you in light of this article, they're going to keep the dollar at 76 or above. And lo and behold, right now, as a matter of fact, is at 76.17. And again, it hit 76, bounced. It just never even touched it. As a matter of fact, I think the lowest we got is 76.05. So again, we're doing this. So this is all interesting to me, guys, and I don't know what I'm really not sure what to think. Either there's like this big dam, and there's this huge explosion that's coming, right? The dam's not going to hold any longer, and we get these little leaks here of information like Bloomberg and Reuters and things like that, and the Fisk article. There's just little leaks coming out, but then there's going to be this explosion, or there's this nice slow demolition of the dollar. Just it's kind of like in a stock that's declining, where the big boys all know the stock is doomed, right? They'll slowly sell their millions of shares, right? Now they'll keep buying a little bit up just to keep it propped up, so the rest of the people start, they can unload their shares. I mean, that's what they do, but they know it's done. I mean, you've seen that with Enron, WorldCom, and other infamous shares back in the early 2000s. And that's exactly what they did. So anyway, I'll leave it at that, guys. I'm not sure. This is all very interesting to me. Please, if you could leave some comments, and I'd like to know what you guys think of what's coming up and what this all means. Please rate the video too. That helps spread my word too as well. And if you could subscribe to the videos, I'd appreciate that as well. But please let me know what you guys think. If you want to record a video, let me know. Just send me a video request, and I'd love to have that too. I really like to get kind of your thoughts on this. So anyway, guys, I'm sure we'll have some more tomorrow. Hope you guys have a terrific day, and like I said, neighbors up north, hope you guys have a terrific Thanksgiving, and we'll be talking to you guys soon. Okay, have a good one. Bye bye now.